Well, top of the morning to you. This is our Tuesday key market drivers call for it is September 10th, I believe. So there's our contact info. We would certainly love to hear from you. Let's go ahead and get into it. So I think the big news this week is, I think, clearly that top bullet. We've got a pretty important USDA report here coming up on Thursday. That's our September WASDE. The USDA will give us their updated production estimates. They'll update all their supply-demand balances for the U.S. and the world as well. But this is one of the more important reports of the year, so the market will be watching it. It's really the production numbers will be the key item. What's the corn yield? What's the bean yield? And remember, this report carries a good bit of weight because this is the one that the USDA's actually got boots on the ground. They're actually got people out walking around in the fields and counting and weighing and measuring and all that sort of stuff. So some have asked, we talked last week about, harvest lows and the typical timing of that. Get asked quite a bit, well, these markets have bounced back up a little, not a lot, but they've bounced back up a little. What is prompting it? And I think some of what that support is coming from is, I'll show you export sales and kind of give you some historical context for them, new crop sales. But the reality is we've sold a little bit of stuff. The USDA on any sale, I think, Nate, help me out here. Is it over 100,000?
Yeah.
100,000 ton?
Right. I think that's right. Yep.
They will actually, of course, they report export sales every Thursday. But if you get a sale over 100,000 tons, then they will. It's called a flash sale. They'll basically send out a notice that, hey, we sold X number of soybeans or X number of corn. They'll tell you the crop year, and they'll tell you, if they know, who we sold it to. So we've had a decent amount of those for both corn and beans. I think that's kind of got the market a little excited. Don't know that it's too big a deal. When I show you the historical context, you will understand why. That third bullet is actually probably got a lot more to do with what veg oil prices are doing, but we've seen veg oil prices back off last week, soybean oil futures specifically, and that's probably a big chunk of the reason there. We in the U.S. are forecast this crop year that we are going to burn almost as much soybean oil as we eat. So it's not like it's a small number on the balance sheet. And so when energy goes up, has a tendency to lift bean oil prices, not all the time, but a lot of the time. And the converse of that happens as well. And also harvest begins, at least officially. The USDA gave us harvest progress on corn. We're just scratching the surface, as I'll show you. I didn't look. I forgot to look, Nate. Are we going to get bean harvest progress next week, or?
I think it was next week. I don't remember if it's next week or 2 weeks, but I'm pretty sure it was next week we start seeing that.
Yeah, so we should. We're starting to get at it there. Actually, I'll back up there. That picture, I think Nate, you took that picture, that up at Farmer Dave's place.
Yeah, I think that was a couple of years ago. Yeah.
Yeah. A pretty picture. So I talked about the WASDE. When you look at this report, and that you've all seen, or most of you have seen Bill's ranking of importance, he grades importance by how much market disruption, price disruption, on average do we get over on report day. And it's the fifth most important report for soybeans, and the eighth for corn. I was a little bit surprised it was that far down the list on corn. For the wheat folks on this call, this is not typically a wheat report. This is one of the least important reports when you talk about wheat. One of the most important reports when you talk about wheat, if you look all the way to the last bullet on this slide here, we have the SEP1 stocks and our small grains report, where we'll get final wheat production. We'll get a lot of information from the USDA about wheat. That is one of the more important reports for really all the crops, but wheat, corn, and beans. So what else do I want to talk about that I haven't covered here? We did get our jobs report last week. What does that mean? Well, I think the market looked at that as probably increasing the likelihood that we'll get a relatively bigger rate cut. I think the chances of a 50 basis point rate cut at the September Fed meeting here coming up is more likely. And the reason that that's important to you in the commodity space is, remember that the lower interest rates go here in the U.S., the lower the value of the dollar is likely to go with it, and that can have a bit of a supportive effect to commodity prices. So So what are we expecting on the WASDE? I'll be honest with you. If you look at the production, and that's that bottom section down here, I was a little bit surprised that the trade really isn't looking for much of a change. If you look here at the corn yield at 182.5, that's down a little bit from the 183.1. I think there's two reasons for the lower bias. I talked a little bit about it last week. One of those is just we had a little bit of a dry finish here. I would argue that we probably have enough moisture in the ground in most places that we grow corn to get the crop to the finish line, but a little bit of a drier bias here in September and late August. I think the other part of it is just that pro farmer crop tour that we talked about on the call 2 weeks ago. I think that maybe put a little question into the market's mind here. If you look at soybean yields down here, the trade's looking for a bit of a smaller uptick than I guess I would have guessed. Remember, pro farmer, that does have a little bit of a historical tendency to kind of find a little less of a crop out there than the USDA typically finds. Remember, they just threw their hands up and said, hey, we got record pod counts out here. I think they were at 54.5 bushels an acre. So if there's a surprise in the report, I would think that this might be the best, the most likely spot for it to be, but we will see. Again, I was a little bit surprised that the trade was not looking for a bit bigger bump.
I think Dave Mack, he was up in North Dakota last week, up in his farm, and remember he's a farmer at heart, right? And
yeah,
he called and he says, "Holy cow, these crops look unbelievable up here." So for a farmer from North Dakota to say that the soybean crop looks amazing, to your point, there's probably more beans out there than what we think.
Well, yeah, and it's like the picture I sent to the group here this weekend when I was out scouting deer, looking for where I'm going to put my stands up. The soybean field that I walked through to get to one of my normal stand locations, they were up past belt high on me, and I'm pretty tall. And the amazing thing is when you walk and you look at those plants, they have actual developed pods, not little pods that the plant might pitch off. They've got developed and filling pods all the absolute way to the top of that plant. And that is usually a pretty good sign for good bean yields, but we should start getting into harvest here. We might cut a few fields this weekend, but really get going here in the next 2 or 3 weeks. So if you look on the left here, here's some of those flash sales that I was talking about and the dates. Really, this kind of started the last week in August and has continued out. I think we got didn't we have another 132,000 tons of soybeans for new crop flashed to China, I think, yesterday. So we're getting new crop sales. Now, I think part of the argument is, well, you better be selling new crop soybeans and corn right now. This gives you a little bit of historical perspective. As of the end of August, you can see the dates in the two grids there in the upper right-hand corner. This kind of frames up for you how much corn we've got sold for new crop and how many beans we've got sold for new crop relative to where we were at the same exact time last year. And as you can see, we had a decent year last year. We've talked about corn export sales. We didn't set the world on fire, but certainly did better than I think the USDA or anyone in the analyst community thought we were going to do, exporting corn last year. And we're actually a skosh above that year's pace. So pretty decent. We're not running off and hiding here, but pretty decent message.
Say, Dave, I know somebody's probably thinking this, but when was that trade dispute we had with China? Was that 18, 19? When was that?
I'm going to say it was 1920 if you look at how low the bar was.
So if you look at that, I mean, so our new crop sales right now are the lowest we've seen, with the exception of the year that we had the trade war.
Yeah. Actually, I think that that was a continuation. I think it was actually the year before. It was 1819, I believe, was the year that we had the lowest. Yeah, that was the big ending stocks number and the really low export number. But yeah, that's a very good call out. And that's kind of the message on beans. We had a disappointing soybean export sales year in this crop year that we just finished up. And we're getting out of the gate even slower than that. Now, before you slit your wrists, as we say, I was talking to Bill about this yesterday, and he said, you got to be a little bit careful with some of this pace data this early, because it's kind of like some early harvest results that we get, right? It looks like we got a lot. Looks like we don't have that much on harvest yields when you're 5 or 10% into harvest, and then it looks completely different out in the middle. So, his indication to me was be a little bit careful with the early pace data because it's not always the greatest indicator of what the final number is going to be. But suffice it to say, on beans, we are not setting the world on fire. There's a different way of looking at it. There is cumulative soybean sales to China by marketing year, and you could see that this is about as slow as we've gotten out of the gate to our biggest customer in a long, long time. I suspect if you saw the same thing back in 18, 19 when we were having the trade war a bit, it would probably also tell a bit of a different story. But
now this is just U.S. Soybean commitments to China, or is this global?
Yes. No, this is U.S. Yep, this is U.S. So. Yeah, a bit of a slow start. We also had as one of the bullets the crude oil markets moving lower. There's your chart. We haven't been below $70 since kind of very, very early days of January this year, and we haven't been down to some of the $67.5, $68 levels that we've been yesterday and today. You got to go back to what mid last year, I guess. You got summer of 2023.
Mid June we had a bunch of trades kind of down on that 68. 67.5, 68, and it looks like if we kind of peek our head below that a little bit, then it's kind of down to that $65 spot. But I was telling you this morning before we got on the call, it just seems odd because to your point, we all look at this as commodity like ag commodities, but you look at the crude oil stocks, our crude stocks have fallen down to kind of the bottom of the 5-year range at a time when prices can continue to fall. Now we're not pumping any less out of the ground. So that must just tell us then if we're pumping the same amount out of the ground and our stocks are declining, we must have some pretty decent demand. But this is likely more probably what would you say, Dave? A spec response to maybe some economic, either political expectations or I mean in other words, this isn't just supply and demand based.
Well, I don't know. I asked one of my smart ass buddies that very question. He said, "Well, there's two reasons petroleum is this cheap: supply and demand." I think there is certainly a political element to it. That the smart ass supply and demand. U.S. production is setting the world on fire. We're going to set another record. We are going to have the highest production that we've ever produced, I believe. Finally, even surpass some of the pre-COVID levels. So certainly supply is very good in this country, especially. But I think the other thing is that on the political front, some of the geopolitical stuff, at least for right now, is still smoldering, but it is not fully aflame. I think that's maybe the other part of it. But I think on the demand side, remember, our economy is slowing. How quickly it's slowing and whether we go into recession or not is of a great deal of debate. But China's economy is struggling mightily. And us and China are the two biggest energy users on the planet. And it's, by the way, not that close. So when the two biggest economies on the planet are slowing, I think that's the other side of it. The expectation is for demand to fall off here just a little bit. On the political front, talked about the geopolitical risk. But one of the other things that I think, Nate, you might have brought it up last week, but I thought it was a very good question. And the question is, well, the Biden administration has indicated that they plan to start refilling the strategic petroleum reserve below $70. Will they actually step in and do that? That is what has kind of supported the market every time we've been below 70 here in recent years. But are they going to do that before an election, or are they just going to allow prices at the pump to drop and then maybe start on November 5th? I don't know. I'm not a politician, and but that is another. I think the fact that this is an election year might have something else to do with this. So we'll see. But that's, I think, one of the things that's been a bit negative on prices. You can kind of see here where we're at on corn. We had another positive week on corn. It's not setting the world on fire. It's not going up in 3 and 4 or 5% a week, but we're up another 1.3%, another little better than a nickel last week. And what's going on there? Well, I think the export sales is probably the biggest part of the answer to that question. I think the expectation that maybe the corn yield and crop are not maybe quite as big as the USDA showed us on the August WASDE. But remember last week, we also talked a little bit about the timing of harvest lows in years where you got a big crop. I went back and looked, and corn lows, new crop corn, these corn lows were actually made on August 26th. A little bit surprised to find out November soybean lows were actually made all the way back on the 16th, and that was coming off that, remember, very bearish August WASDE report. So really outside of that, I would argue that there's not a whole heck of a lot different. We'll talk a little bit, Paige will talk a little bit about Brazilian weather and whether that's a problem just yet. Probably not yet, but something that we're watching. Told you we've got harvest officially underway. I say officially because the USDA is reporting corn harvest progress. You see we're 5%, a little bit ahead of the long-term average, but honestly, it's just some of the very southern fringes where we plant corn. We really won't be going in earnest for probably at least another 2 or 3 weeks here up in the heart of the Corn Belt, some of the bigger producing states. Scott is on vacation this week, so I'm going to take a stab at giving you the wheat update. You can see wheat prices also bounced a little bit last week, largely for, I think, a lot of the same reasons. Just about got our winter wheat stuff in the bin here. We got 85% of that crop is harvested. Still continue to hear good harvest results. Seems like a pretty decent quality crop. A lot of bushels, especially hard red winter wheat bushels and likely spring wheat bushels, or this is actually spring wheat harvest. But we seem to have decent protein in addition to very high yields, which those of you that have been in the wheat world for very long know that that's a little bit unusual. So I think that's generally good news at this point. Winter wheat planting, again, just kind of getting started. We'd like a little bit more rain out here in the western Corn Belt, out here in hard red winter wheat country. Paige is going to show you the prospects for that coming up in the next couple weeks, but we're right on that long-term average, just start scratching the surface, getting the winter wheat crop in. As far as the rest of the world, I kind of ran out of room. I would have liked to put another bullet in there, ABARES, which is the Australian USDA. I think Scott might have mentioned this last week. They raised their Australian wheat production estimate 1.5 million metric tons from 30 up to 31.5. That's well ahead of their long-term average production. So that's good. Russia's going the other way. ICAR lowered their production estimates and export estimates for Russia. You could see about the same amount. French wheat crop not doing good, although that's, I would say, largely a known. That's pretty close to that 26 million metric ton where the French government is also. But I think another bit of news here, we got our StatsCan numbers. I think I talked about them a little bit last week, but this week, or I guess maybe it was last Friday or yesterday, we got our August 1 stocks numbers from Canada. Remember, their crop year is starts a month earlier than ours. Ours starts on September 1. Theirs starts on August 1. So they reported their August 1 wheat and canola stocks, and holy moly, we got plenty. Wheat stocks at 4.6 million metric tons. That's a full million metric tons above the average trade estimate. So we got a lot of wheat in Canada. We look like we've got a lot of wheat in Australia, maybe not quite so much in Europe and Russia, but that's what the wheat market is really trying to balance off here. So soy complex, a little bit of a bounce in beans and soybean meal. Oil was down for the reasons that I've already talked about. StoneX is one of the bigger analysts out there. They raised their soybean crop estimate and raised their yield estimate. So Cordonier, I forgot to take the down a half out, but he didn't. He stayed at 53 for his estimates here in the U.S. as well, 53 bushels an acre. So not a lot to report here. I think one of the questions that the two things that the market's starting to talk a bit about when it comes to the soy complex, I mean, outside of a little flurry of export activity, is this South American thing, is that a big deal yet or not? I'll let Paige get into that a bit when we get to the weather. And the other one here is in North America. How much is this kind of what you would call a little bit of a dry finish to this crop? How much is that hurting bean yields? I don't know that I think it's overly a big deal because I think we've had enough moisture in the soil most of these places, but that's what the market's wanting to talk about. Are we trimming a few bushels here for corn and beans, especially beans here, with some of this dryness we've seen at the tail end of August and out into September? So We shall see, and I think we'll get a big clue here on Thursday when we get the USDA WASDE. Canola down hard last week. Palm oil finally coming back to some semblance of reality, but maybe not quite so much. You can see that palm oil, even though palm oil was off last week, South Argentine soybean oil was off even more. And we're starting to see it in the results. Exports, we got our Malaysian Palm Oil Board production and stocks data for August today. And not too far from expectations. Stocks up a pretty good amount, 7.3%. Exports down. Now, they were down almost 10%. The trade thought it could be even a little bit worse than that, but that's not a good number. And I just don't think with stocks building in Malaysia that we're going to be able to keep this bullish story rolling too long. You see palm oil here is about $36 more expensive than Argentine bean oil. It ought to be about that much cheaper to go back to historical norms. So again, it's been a much more resilient bullish market than I thought, but I think it's coming down. The other thing I wanted to point out is the canola stocks. I talked about the StatsCan wheat stocks. We got a lot of canola in Canada. We've been telling you that some of the big grain handlers, big crusher refiners up there have been telling us for quite a number of months, hey, there seems to be plenty of seed in the country. Stocks might be around 3 million metric tons. Well, sure enough, 3.1 million metric tons. You combine that with the 19.1 million metric ton crop that StatsCan estimated that we talked about on last week's call. That's plenty of canola. That's plenty of canola to go around. Plenty for the crushers, plenty for the export market, plenty left over at the end. So it appears that we have an adequate to ample amount of supply north of the border.
So China better start taking some seed, you're saying?
Well, yeah, and then that last bullet. I mean, we started talking about this last week. China has followed through with, they've actually started this week, I believe, this anti-dumping probe. You probably saw, I had a little bit of tongue-in-cheek yesterday morning on the Daily Wire. They're starting this. They're looking at 2023 calendar exports, and the probe could take up to a year to complete. And you know, my smart aleck comments in the report yesterday morning was that means Canada's got a year to rethink this whole 25% import tariffs on Chinese steel and aluminum. Or you're going to get slapped with anti-dumping tariffs. So we'll see where this goes.
Does that mean then if it's going to take them a year to complete this, that we won't really see a lot of purchases out of China on seed for a year, or what does that mean?
You know, that's a great question because we talked about the flurry of activity that this announcement caused. I think Canadian buyers were Chinese buyers were kind of rushing to Canada to buy some oil or some seed and some products before maybe the crap hit the fan. I would be surprised if China goes a full year without some sort of actual tariff response. Maybe they start trimming import licenses. Maybe they slap a preemptive duty on it. On Canadian seed coming in. I don't know. I was a little bit surprised that China was this, I guess, passive in their response. I don't know exactly why that is, but we'll see. I feel like there's going to be another shoe to drop here at some point. But
well, the other thing though too is I think one of our Canadian friends was telling us they have an election coming up now too.
Mm-hmm.
So you know, does that change something if they have an election and the political winds change in Canada? Does that impact some of this? So
yeah, I think it hard telling. I think it certainly could. The politics, you've heard me say before, I'd rather try to predict the weather next year than the politics. So
yep.
And that certainly is playing, it seems like an increasing role in commodity prices and the risk that we manage in the commodity space. So there's your Malaysian Palm Oil Board data. I won't dwell on that, but it's in the slide deck this week. And with that, I'll leave it to Jay to tell us if there's any decent news finally on the dairy side of things.
Oh, I don't know, Dave.
It seems like this has been one thing after another, doesn't it?
Yeah, it does. If you want to move to the dairy notes, there's a couple of things to highlight last week versus that happened. We'll talk about that. We got a product report that came out on Friday. And we can talk about what the trade's really talking about when we're talking about milk production. So on the milk production side, HPAI, so avian flu impacting the herd. The trade's really concerned about what's going on in the West Coast, in particular California, which is a huge milk producing state. along with Idaho and a couple of other states thrown in there too. Keep in mind, this is the same virus that impacts like egg layers. So any of those folks out there that are purchasing eggs, we know egg pricing is really high right now. But unlike the egg layers, we don't euthanize dairy cows. So it's more kind of cows get sick. They're sick for a couple weeks, kind of like what you and I, if we get the flu, get a cold, we're not as productive as what we normally would be. And then it kind of goes away. So the cows are being segregated, the milk's being dumped. But again, when you're dumping milk in this time of year, when milk is really tight, that's going to force the cash basis numbers up. So what's being paid to the farmer producer is higher week over week. So the producers, or the processors, I should say, are raising prices to get more milk because milk is really tight right now. So we're above last week's numbers and above the 5-year average on basis and what's being paid to the producers. Now on the product side, we did get a products report that came out on Friday. We're down on cheddar cheese. I highlighted cheddar cheese just for the fact on the cheese side, that's what trades through the CME exchange. We've been down all year. We continue to be down. On the future side, spot market ended up at 227 on Friday, up 6 cents. But in the deferred contracts, we're down about a penny and a half. I think that penny and a half decline really kind of highlights that new cheese capacity coming online here in Q4 and well into 2025. So I think from the cheese market perspective, you say, hey, things are tight right now. I get it, the spot market's up. But in the future, looking down the road, it looks like things were going to get better. On the butter side, not a lot of changes. Pricing, we ended the week at 317, unchanged from the week before. And you can see on the products report, the butter production July number was up 2.2% versus last year. Year to date, we're up 4.1. Our stocks are higher, but yet we're above $3. Now, the one comment I will make on butter, just from an international perspective, butter right now in Europe is over $4. New Zealand, Oceania is right around $3, give or take a penny or two. And we're sitting at about 317, 319. So we're kind of in the middle. Do I think there's a risk that we're going to export butter out of the U.S.? No, I don't. We're a net importer of butter. But it is concerning when butter's sitting at $4 in Europe right now. They're dealing with some lower milk production numbers than they anticipated, and demand's been good on butter. So when you talk about butter on a global basis, demand's been pretty solid. So can't really complain about that. But we'll keep watching that going forward.
I was considering on this call employing our customers for a butter boycott, but I don't know that we have that many people that are listening to us that it would matter. But
butter's got that halo effect, and I know younger people, I'd say people in their 20s, they're very much in tune with clean label, and you can't get a much more clean label product than butter. So
tell you what, when I was in that category of a younger person, butter literally was poison.
Yeah.
High in saturated fats, high in cholesterol. It's horrible for your health. So it's always amazing how things change, right?
Yes.
One thing I wanted to show you here very briefly before we get to the weather. Remember, we've been talking about how short the spec is? Well, the spec is coming in buying here. Why is the spec buying? Well, that's a great question. Maybe a little bit of the dryness. Maybe they're buying into some of that story. I think more important, when you look at the speculator, they're a momentum follower. And this is a market. I was talking about when at least the current lows were put in for Nova beans and D's corn. They have noticed that this market has lost its downward momentum, and I think they're starting to reel in some of these short positions. And as you know, that now is probably exaggerated to move up a little bit. I think with the big crops, it's hard to get too bullish anything. I think that the bigger question is, have we seen the season lows yet, or are we going to go even lower? So, Paige, what's the weather looking like?
Yeah, so we're kind of getting to the time of year where the past 7-day precipitation doesn't overly matter. The 7-day forecast, you can see that there's quite a bit of rain, and a pretty big system that's moving in kind of the southeast and kind of moves its way up into the Corn Belt. I don't think that's anything to be overly worried about just because haven't quite kicked off harvest yet. It's really when you look at those longer term forecasts, those are the ones that we're really looking at. So you can see in both the 6 to 10 and the 8 to 14 day, we're expecting above average temperature outlook for the next 2 weeks. Just means it's going to be warmer than it normally is this time of year. Which I think here this coming week, we're going to be back up into the 90s. We had a nice little peak at fall this last week. Beautiful weather. And now we're kind of, I think in the realm of, yeah, I think that was on the slider. That was Fool's Fall. And we're going back to last summer before we launch into actual fall. So a little bit warmer here over the next 2 weeks, which could be helpful, especially if we get slightly above average rains in some of those areas. September rainfall is not overly high to begin with, so above average rainfall is not anything to be overly concerned about, especially when it comes to harvest, and especially when you add that with those warmer temperatures than normal. Getting some rain during the beginning of harvest, I don't really think in the grand scheme of things is going to slow anything down. Probably going to start seeing harvest numbers pick up here in the next couple weeks. Some of those early planted fields might start getting out as soon as in the next week. So
I'll bet we have some combines starting to roll here this coming weekend on some of those beans we showed you. So
well, and that heat too. I mean, that will help dry the corn crop down. Where this year it seemed like a lot of the farmers we talked to either on the crop tour and farmers around here, it's been a bit of a late fall. In other words, the crop is wetter than what it normally would be, and if it stays cool, then the farmers have to pay to buy natural gas or propane to dry that crop down. So if it's warmer, that should help a little bit.
Yeah, they'll just let it go.
I was going to say, with that forecast, they're probably, instead of harvesting it and drying it in a bin, they're going to let it sit and dry, let Mother Nature dry it.
Gotcha. Mother Nature doesn't use nearly as much nat gas to do it.
Yeah, she probably owes them a few favors over the last few years. So.
Yeah, it seems like it. So we keep getting asked, do I worry about South America yet? Do I worry about South America yet? Paige, do I worry about South America yet?
Not yet. I think Nate said forecast coming out of Brazil, it's the driest soil moisture they've had in the last 10 years. That sounds very worrisome. But again, the rainy season is expected to start anywhere from kind of mid to early September to mid to early October. So that gives us a little bit of a runway here. What that's going to do is it's not really going to affect soybeans as much. Farmers will just wait to plant their soybeans until they get more rain and better soil moisture and planting conditions. The tricky part with that one is if soybeans are going to be planted later, that's going to push your safrinha crop back. And that's the one that we worry about a little bit. So at this point, there's no need to hit the panic button. But this is definitely something us and the market are going to be keeping an eye on.
Yeah, and one of the things I guess to point out here, we had that safrinha corn crop disaster a few years ago because we got the beans planted so late. But what I also keep reminding people is, remember, when that happened that year, the reason we got the beans planted so late was the exact opposite. It was too damn wet to get stuff in the ground. So I guess it's a bit of a double-edged sword. We're watching this, but I think the comment that I made last week, I'm going to stick by. If we get to the first Tuesday when we have our call in October and it hasn't rained and the forecast map still looks like this, okay, then maybe it's time to start reacting to it. But even Dr. Cordonnier not only didn't change his production numbers, but his bias is still neutral. Again, I think the message is it's just still early. So, well, thank you, Paige. Thank you for everybody that chimed in here and participated today. And as always, thank all of you for listening and watching. We would love to hear from you. And as always, be careful out there.